today, please visit davma.org. That's davma.org.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Kicking off the final couple days of 2024. It's Chuck, Mark, and Tucker with you, and we open today with a discussion of Boeing, as Boeing shares this morning in early trading have found themselves sliding more than the broad index, which we'll get to what's going on there later. But Boeing shares down about 4% in trading today thus far, this following a crash of a 737-800 in South Korea over the weekend. And when we look at this, a couple things. First, I don't know, have either of you been following what's been going on with this story at all?
Just the broad contours.
So, to anyone who's unfamiliar with it, a Jeju Air, who's a South Korean airline, they were operating a plane flying into, I believe it was Muan Airport on, I forget what day it was. It was a 737-800. For those of you who aren't familiar with the 737-800, it is not a new version of the 737. This is instead a version that was made largely during, if you look at, kind of when they started making these, they started making them in the late 90s, I think 97 or 98, and they continued to through the mid-2010s. So this is a plane that, kind of had a 20-year span of being built. By and large, the 737-800, pretty much the safest airplane in the history of commercial aviation by just about every metric. And so in looking at this, what happened here, that, again, we don't know, a ton of the details, but the plane was coming in for a landing. The tower reported the possibility of a bird strike, and the pilot then acknowledged, hey, I think we've had a bird strike. They did a go-around trying to land. For whatever reason, they were unable to deploy their landing gear, and one of the things on many commercial aircraft right now is if you do not have your landing gear deployed, there are systems built in to prevent you from deploying thrust reversers as well. When you land on an airplane, or when you land in an airplane, rather, when you come down and finally, land on the tarmac and try to stop, one of the things that you'll see happen is the back half of the engine basically opens up and reverses the thrust so that it is pushing forwards, stopping the plane.
I was hoping that was deliberate.
Rather,
when that opens up.
The first time I saw it, I'm like, Dad, what the heck is this?
Hey, guys.
I'm like, guys, like the whole engine just fell. No, like that's what's supposed to happen.
This thing's a transformer.
Yeah, the first time I saw it, I was a little bit freaked out, quite honestly. But it is basically taking the thrust and throwing it forward to halt the plane rather than continuing to thrust back. So Boeing airplanes, after an incident on a 767, I think in the 80s or 90s, they developed systems so that you can't have the thrust reversers deploy unless the landing gear are deployed as well. So one of the theories that's going around on this is, okay, because the landing gear couldn't deploy, they also couldn't engage thrust reversers, and they basically came in belly down to the runway, and for some reason, and this is one that, talking to the aviation people I know, they have no answer for this. There was a big communication system mounted on a concrete wall shortly after the end of the runway that the plane crashed into and subsequently exploded, and that's where the people on it actually ended up dying. So Boeing stock down 4% on the news of this crash, and we don't really know much to this point, but what I can tell you is that the 737-800, unlike the 737 MAX, which was involved in those two deadly crashes because of how it was designed back in, I think, 2018 and 2019, the 737-800 is pretty much at the top of the list in terms of the safest planes ever built for commercial aviation. And so I think this is one where we need to see exactly what kind of information we get, but it's unclear that there's anything related to the design of this plane that's a problem. And furthermore, Boeing's not even building this specific plane anymore. So I'm trying to reconcile the stock price move other than, hey, it's got Boeing in its name and it's been bad before, so we're just nervous and we're going to sell it now.
Yeah, sounds like panic. I'm very uninitiated when it comes to this. I could not have given anything like the explanation you gave of that crash. That said, it is easy. There are more Boeing planes in the air than there have ever been, flying more miles than they've ever flown.
They built Boeing, just so you know, there are over 5,000 of these planes.
More than there have ever been, right?
That have been built.
My mind as a uninitiated layperson immediately goes to, oh, geez, another problem with Boeing. But is that right? Is that fair? The incidence of incidents, two different spellings, involving Boeing planes might be as low as it's ever been. There's just so many flying, so many miles now that it's inevitable that you'll hear about a Boeing accident every X number of weeks or months. Tragic, but inevitable.
I mean, just to put this in perspective, and again, I don't know how many of these 737-800s are still flying, but the typical life cycle of a commercial airliner is 30 years.
Wow.
Generally, they last 30 years. You have a mid-cycle. There's all kinds of different maintenance that you do, but there's a mid-cycle refresh, usually 15 years in for major components and things like that. But 30 years is what airlines expect to get out of one of these. The first one's being built in 97 means you probably have most of these running. So even let's assume that it's like 80% of the 5,000 that have been built that are still running. 737, it is not a long-haul airplane. You're not flying these things from New York to Tokyo. They don't have that kind of range. Their range is like 3,500, maybe like 4,500 miles at most. And so generally, let's assume out of the 4,000 planes that might still be flying, let's say on average, you're getting 3 flights a day because some of them are just, shuttling people back and forth from Boston to D.C. Some of them might just be doing, Boston to L.A., so they're just getting, 2 flights. But let's say it's 3 flights a day on average. You get 12,000 flights a day of these 737s then. Each year there's 4.4 million flights of this plane. So I'm trying to just give some context as to look, these planes have probably flown 40, 50 million flights without whatever happening. So I don't really think this is a Boeing problem. And unlike, what we saw with the Max, where it was, hey, this is a Boeing problem and you've got to fix this, I don't know what the specific issue is here, but I also am not sure how it necessarily affects Boeing's business going forward, is kind of where I've landed.
Yeah, I think it's important to keep the numbers, the absolute numbers in mind here, and the relatively small incidence of issues with Boeing airplanes generally. I'm not excusing somebody who didn't put a bolt in where it should have been, but the relatively low incidence of issues at all, given the number of planes there are in the air and the number of miles these planes fly. I'll also add that whenever something happens in a less sophisticated economy, South Korea is rich, but not nearly as rich as we are. It's still an emerging market.
Sure.
You always wonder about human error. Are they trained to this stuff doesn't happen for the I'm not a jinx. I don't want to jinx us here, but for the most part, this doesn't happen in U.S. airports. Occasionally, you have a rough landing. I don't ever recall somebody not being able to or failing to deploy the landing gear.
No,
so this could be a training thing.
You do have stuff like this that still happens. I mean, there are times, I forget when exactly it was. There was one, I think it was in either Colorado or Utah, maybe 12, 15 years ago. Plane like landing gear did deploy, skidded off the runway. The only death was at the end of the runway was a road, like a regular road, well past the runway that the plane skidded off, and they hit a Jeep, and the occupant of the Jeep was killed.
That's crazy.
And so
I didn't know or remember that.
It was, I forget exactly when it was.
That's a bad day. I'll be right back. Just going to go get some milk.
Tough one there.
All of a sudden there's a...
Tough one there.
Yeah, that's a lousy way to go.
In any case, this is what we're seeing with Boeing stock right now. Still not a ton of details. I'm sure we'll get more over the next few weeks here. But Boeing stock down north of 4% as a result. And... nobody knows anything.
That's overreaction. Isn't it a typical overreaction? I'm going to... what sounds like a tangent, but I think it makes sense. Remember remember, it just happened 2 weeks ago, the drone hysteria. People are mistaking Venus for drones, the constellation Orion
or airplanes for drones.
Airplanes for drones. There were drones they've all gone away now. Not uncoincidentally, as somebody else pointed out, since it's gotten cold out, people have stopped flying drones mischievously.
Sure.
But hysteria builds fast. And it's easy to jump to conclusions. I think we do, as you suggested, have to wait for the findings and think of all the reasons why this might not be representative of a bigger problem.
Yeah, I think that's fair. So in any case, nobody knows anything on this. We'll see what ends up happening. I thought you were going to go somewhere else in terms of, unfounded hysteria building. I don't know. Like, I remember as a kid, like, at Halloween, people would be like, hey, watch out for, razor blades and apples and stuff.
That's another example of...
It's like, who's putting a freaking razor blade in an apple?
Yeah.
Like, no one is.
Right. No, perfect example.
Let's take a quick break here. When we come back, we'll talk a little bit about what is going on in the broader stock and bond markets as we head towards year-end.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you're retired or nearing retirement and haven't done your planning yet, you could be missing out on opportunities that can save you thousands of dollars. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called Balancing Asset Protection and Avoiding Estate Taxes. Early estate planning can have many benefits, especially if you want to protect the assets. But there's another big advantage. Doing your planning the right way might also help you eliminate your estate taxes. Learn how to keep your assets in your family and avoid probate. Get Cushing & Dolan's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes. Call right now, 866-848-5699. That number again is 866-848-5699. Or you can request your guide online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K was another tremendous success. Every dollar raised supports a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. If you'd like to help our great American heroes this holiday season, visit dav5k.boston and make a donation today. Thank you again for your support.
Piece in the Wall Street Journal, where are stocks and the economy going? Ask bonds. And I just don't know that I buy this story from Bloomberg Opinion. And basically the premise that it lays out is, hey, if you look at, how bond, a few different key indicators on bonds, it'll tell you about what the economy is going to be doing. And I find that not plausible given the fact that the last few years, bonds have been completely wrong about where this economy has been going. And in fact, the stock market has had a much better bead on where things are going to be 12 to 18 months from now. I look back to 2022, and the bond market was saying, hey, Fed's not going to have to raise rates. Meanwhile, stocks started selling off immediately in 22, being like, hey, guys, there's a problem, and the Fed's going to have to hike through the roof. Then in 2023 and 2024, you've had these predictions from the bond market being, well, the Fed's going to have to get aggressive in cutting because the economy's heading into recession. And stocks have said, no, we're good. We're going to keep chugging along, and the economy has not gone into recession. So I know that there's this wisdom out there, this conventional wisdom of, hey, the bond market's the smart money and stock traders are just a bunch of dumbos who are going around and, pressing buttons willy-nilly. The stock market's had the better read on this economy for at least the last 3 years now.
Well, interest rates are set globally. We had, for example, very low interest rates in the early 2000s because there was a so-called global savings glut. It was a bit of a mystery. It became clear as time went on. So normally, all else equal, low interest rates are a sign of economic fragility. They're a sign of economic ill health. You don't necessarily want low interest rates.
No.
A growing, robust economy conjures up a demand for loanable funds, which puts upward pressure on real rates. Indeed, we've had real rates, that is after inflation rates, and we can actually break rates up into a total interest rate that we see in the newspaper every day and a real interest rate. That's thanks to Treasury inflation-protected securities, which have a real yield associated with them. So we know that it's mostly real rates that have been driving the recent rise in interest rates over the past few months. That could be because of economic optimism. That could be because of fears that the deficit will grow under the next administration. Or it could just be random or all of the above. Nobody knows.
Yeah. This also dovetails nicely into a story about what we've seen, kind of this year in, hey, where has money been flowing into in this market? And granted, while it's not an asset class, it is a type of security. ETFs, exchange-traded funds, have seen just a monster inflow this year. More than $1 trillion moving into exchange-traded funds this year. And total assets now in U.S.-based ETFs now reaches $10.6 trillion. That's up more than 30% from the start of this year. Remember, that accounts for inflows plus the capital appreciation of those ETFs. And it certainly seems like this is, again, a trend that is continuing to, take hold in markets. A key difference that we are seeing this year is that you are seeing more money flowing into actively managed ETFs as opposed to just passive ones that track indices. But you're also seeing all the weird stuff that you see, quite honestly, near the top of bubbles happening as well, where you have like, hey, here's a 3x levered NVIDIA ETF that was just announced, or here's, a 3x levered MicroStrategy ETF that was just announced. And, some of the stuff that you're seeing is not indicative of, the security type being, a great vehicle, but more just, hey, this is how we figured out how to capitalize on, something bubbly in a few areas.
So what I think might be going on here is you've got money slowly leaving 401k plans. This trend will change as the millennials' salaries go up enough that they can contribute meaningful amounts, or will maybe halt. But for the last several years, 401k assets, as compared to, say, individual retirement account or IRA assets.
Sure.
401k assets have been pretty static and even falling.
Yeah.
401ks don't use, as many of you know, if you own, if you have a 401k balance, they don't use ETFs.
Haven't some started to?
You can, but it gets problematic under the law that 401ks
under
are governed by, so it
there?
never really took off. Yeah. They're mostly either mutual funds or institutional versions of them, suitable for big, sophisticated investors, or they're separate accounts or something exclusive to you as an investor in a big 401k plan. If you work for a big company, that might be more common. So my thinking on this is, because the shift of asset, you use the word asset classes, we just mean type of investment, stocks versus bonds versus cash. This doesn't represent overall a shift from stocks to bonds or vice versa. It's more a flow of money from 401ks, I think, into IRAs as people retire. They roll their money over. They want more control, so they move it to, say, an IRA.
Baby boomers retiring in larger numbers.
That might be part of it. And advisors like, for lots of different reasons, cost and liquidity and other reasons, ETFs, these exchange-traded funds. So that's part of what's happening here. And I would expect that to continue. ETFs are becoming increasingly attractive relative to old, stodgy mutual funds.
There are some people out there that I know there have been the thoughts of, hey, there's like a bubble forming in ETFs. I've never quite understood what that means because they're just a vehicle, not an asset class or a specific index, as you note. So I've struggled to wrap my head around that, but it is something that gets talked about, but I just haven't been able to understand
Chuck, that's one of those phrases that if somebody uses it, I slowly back away. This person may not understand the difference.
When do you quickly back away?
when Ben Kitchen's in and he starts to. No, I'm kidding. So that may be indicative of somebody not fully understanding the difference between a vehicle, as you say, and an asset class.
Quick break here. We've got Wall Street Watch next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Key Numbers to Know for 2025. Mike, when it comes to 401ks and their contribution limits, 2025 is a little bit unique in that it is the first year of the super catch-up limit.
It is, yeah. So there's a brand new contribution excess amount that you can put into your retirement plan, but only for a very specific window. You must be between the ages of 60 and 63 to participate in this special super catch-up contribution, according to the Secure Act 2.0. And so there's a little bit extra that you might be able to put in if you fall into that age demographic.
So how much is the normal 401k max? How much is the regular catch-up? And then how much is the super catch-up?
Yeah, so for the normal 401k contribution limits, the most that you can put in 2025 is going to be $23,500. If you are over the age of 50, you can do an extra $7,500 into that 401k. And then finally, if you just happen to be in that narrow band, you can do an additional $3,750 catch-up contribution on top of everything else that we already went through.
Folks, our guide this month is titled key numbers to know for 2025, and this is just one of the numbers that's included in it. We also have discussions about IRA contribution limits, tax brackets, a whole bunch of different things that are included in here. How do you request the guide? Call 800-393-4001. That number again to request the guide is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, with 2024 winding down, markets today are in sell-off mode. The Dow down by 660 points, or over 1.5%. S&P 500 also down over 1.5%, or 93 points, and the NASDAQ is down over 1.5% as well, or 340 points. Russell 2000 down 1.75%, or about 40 points lower. 10-year Treasury yield is down by 7 basis points now at 4.54%, and crude oil actually up today, up over 0.75%, trading at $71.21 a barrel. Boeing shares down by 4%, as we discussed earlier in the show, following the weekend crash of a Jeju airplane, killing 181 people on board with 2 survivors. South Korea ordered an inspection of all Boeing 737-800 aircrafts. Meanwhile, shares in MicroStrategy down by 7% after the company disclosed the sale of more than 592,000 shares, raising about $209 million in proceeds. MicroStrategy also disclosed the cash from that sale funded the purchase of more than 2,100 Bitcoins. Elsewhere, VeriSign shares down by over 0.5%. Last week, Berkshire Hathaway disclosed it purchased more than 140,000 shares of the domain registry service company. Palantir Technologies down by over 2%. That stock has had a massive rally of about 360% so far this year and added almost 18% in December alone after earlier extending an Army contract worth up to $619 million. And breaking news as of half an hour ago, the New York Stock Exchange will be closed on January 9th to honor the late and former President Jimmy Carter. So once again, equity markets on January 9th will be closed to honor Jimmy Carter. I'm Tucker Silva, and that's Wall Street Watch.
Taking a look just at markets here, one of the things that I'm seeing right now is if you look at the S&P 500 and its components, markets, as Tucker said, are getting, I believe the proper term is pukey this morning. Right now, we have 6 issues out of the S&P 500 that are in positive territory. There's no rhyme or reason. There's something called EQT Corporation, something called Katera Energy, Devon Energy, Bath and Body Works, Diamondback Energy, and Occidental Petroleum. So a little bit of energy stuff, holding up better for, probably because there's a cold front coming in the next couple weeks. But if you go back and look at this historically, one of the metrics that you can look at is kind of, okay, what's the difference in the number of advancing stocks on the day and the number of declining ones? And right now there's a 491 issue difference, saying that, hey, there are 491 more declines than there are gains happening today. I went back and I pulled the data. The data I have only goes back to October of 1998, so I've got 26 years of data on this. There have only been 18 instances where that advance minus decline number has been greater than 490 in the negative direction, basically. So in terms of what you're seeing, this is today one of the broadest sell-offs that you will see in markets. It's not the steepest, stocks right now down about 1.5%, but it's basically affecting the entire market. And I know everyone likes to try to ascribe, some reason for this, like, oh, it's because of, X, Y. Guys, the last week of trading in a year is generally completely useless for telling you anything. Same as like the first week, but the last week's particularly useless just because no one's here. And by here, I mean no one is actually trading anything for any particular reason in the last week. The volumes that you see, like last week, just as an example, the volumes that you saw were like half of what they normally are. There's no one in the office of, big hedge funds and PE firms and this and that. So what's the reason for this? Heck if I know. There's no news today. Nothing's happened today. There's no new policy that we're learning about. There's no new, horrible story about everyone's defaulting on this or that. It's just, hey, no one's trading, and who knows what this is. It's also the end of the year, so you get all kinds of weird stuff. We talk about how sometimes at the end of months or quarters you can get end-of-month rebalancing or quarter. You could have some end-of-year rebalancing for pension funds where they just said, okay, like, hey, our equities are up this year. We're just going to do a sell of that and go and buy some bonds. And you have no idea if there's any, story behind it other than, yeah, it's the end of the year and our equities did well and we got to sell some and we're going to do that before the end of the year. Okay.
Yeah.
So I generally find trying to ascribe meaning to, stock moves in general is kind of foolhardy. Trying to do it in the last week of a year is useless. Like, I have no idea why this is happening today. Trying to pretend like I do is, would be just me trying to sound smarter. And quite honestly, no one knows why this is happening today. Does it mean there could be more volatility in the future? Maybe, maybe not. And I think you just have to wait until we get into next week, because guess what? A lot of people took off the first, the last couple days of this year as well, or the first couple days of next year. Like, the number of people that are not working in the financial business on this Thursday and Friday is high. So I just don't know that you can read anything into what's happening this week.
Yeah, I think it's a good reminder that movements, even large ones, number one, they're always more frequent in historical context than you think. Movements like this, if you go back about 100 years, so I'll use Yahoo Finance data here, just calculate the daily change and then ask how often has the daily change been less than or equal to, I'll just pick 1.5%, and it's about 6%. Oh, sorry, Chuck.
It's okay.
You want to, no, I'm sorry.
No, you blew it. It's fine.
I totally did. What would you have guessed, though?
I would have guessed like 4, maybe 5%.
I would have said more. I thought, honestly, I checked it twice. I'm like 6%, once every other.
Just because I know we pulled the data on how often it's down 2% earlier this year when people were freaking out in August, and I think that was like 2 or 3% of the time. Yeah. So it's I don't know.
Yeah, okay. So it's not infrequent. You should expect pullbacks like this once every few to several weeks. Past couple of years have been unusually calm, so we're spoiled, you could say. Not uncommon when stocks go up by a lot; they're actually less volatile. But the larger point, I think, is one you've already made, which is movements are often random. They're noise. If you like, you can make up explanations, and the media's job is to do that. The headline always says stocks fall on deficit jitters,
of course,
or something, because it's reporters' job to tell a story. It's our job to an extent to tell a story. That doesn't mean the story's right. So be skeptical unless there's a big, obvious catalyst. Country X invades country Y, stocks fall by 5%. You don't need to do too much investigating to connect X with Y in that case. Otherwise, you should be skeptical, like you said, Chuck, I think.
Anyone new invading today?
I haven't checked. I shouldn't. I keep jinxing us by making fun of calamities here, but not to my knowledge.
I don't think there's been... Tucker, any new invasions today?
Not that I've
seen. Have we forced Russia to invade anybody today? I'm being sarcastic there. Something.
I don't think there have been any new invasions today. So that's that. Listen, you know how on job sites they have, number of days since last accident? We should keep, a number of days since last invasion count or something like that. Number of days since last bear market, at least. Something along those lines.
That's
I don't
not
know.
a bad metric to keep track of.
Someone does it.
Oh, sure.
You always see the pieces published. Hey, this is the longest bull market back in the 2010s and things like that. But look, sometimes stocks just go down and you have no idea why they did. It's trying to find meaning in every movement of the stock market is like trying to find meaning in every at bat that a player has in Major League Baseball each year. It's look, sometimes they just strike out. That's just what it is. It doesn't mean anything. It's just they struck out, or, hey, they hit a home run. Doesn't mean that they're going to hit one every time. It's just sometimes there's just randomness. And I know we don't like that when it comes to markets because we like to think that we're in control of them, but we're not.
It's good to know, though, whether or not how big the random variation or chance component is of whatever you're talking about. If a guy strikes out 10 times in a row, that's probably a skill problem. Maybe not. I don't know what the stats are on length of bad at bats, but you can, in skill-based domains. Go ahead, Chuck. You know where I'm going.
Same with stocks. You can't tell anything from any one particular outcome.
That's right.
But if you look at larger and larger data sets of outcomes, you can start to have more predictability.
Yeah. It could be indicative. If this happens every day for the next 2 weeks, what's happening today, then Houston, we may have a problem.
Right. People look at, Gerard Mayo, coach of the Patriots, and they're like, well, here are some of the coaches that started badly in, their first, 16 games. Okay, tell me about the other 200, because it's unlikely that a coach that starts 3-13 becomes who are the guys that get talked about like this? It's like the Niners guy, was it Joe Walsh? Or not Joe, something Walsh.
Belichick
Bill
was
Walsh.
in that group.
Bill Walsh?
Parcells was in that group.
Yeah. The fact is, most people in anything at the professional level that start badly, they tend to end badly because they're just not good enough ultimately.
So Bill Walsh, Bill Parcells, Andy Reid, Chuck Noll, Tom Landry, Jimmy Johnson, Bill Belichick were all horrible records in their rookie year of coaching.
There are also 150 other ones that have had bad records that did not go on to have.
You don't see the full sample.
Those are the exceptions that prove the rule.
Not seeing a list of the good coaches for their first year coaching.
Right, where
Kevin
are they?
O'Connell, 13-4, and won the NFC North. DeMeco Ryans in his first year as the Houston Texans head coach.
A little bit of a step back by Houston.
Nobody's mentioning those guys, though,
but
it doesn't fit their
in
narrative.
any case,
Sorry.
The point I'm trying to make
you
is
make a great point.
You need a larger sample size to look at these things. And the small sample doesn't tell you anything.
You need to see the failures too, and the bias in these data sets is the failures get thrown out.
Yeah,
you see this with mutual fund performance. The finance people call it survivor bias. I don't know why they have to give a separate name to it. It's just sample bias. You hear it every day when somebody says, "Well, Einstein didn't go to grad." He did, but not right away. When Einstein did his paper, he was working as a patent clerk. That doesn't mean his famous relativity paper or whatever it was. I don't know, I'm not a physicist, but I know you know what I'm talking about. He was working as a patent clerk.
There's a great book by Alan Lightman called Einstein's Dreams. It takes you through all that stuff. It's a great book.
I will not be reading that.
It's honestly one of my favorite books. I read it every 5 to 10 years just because you get something new out of a book when you read it more often.
It's true.
So, but look, today markets are down. Doesn't necessarily mean anything about tomorrow. There have been here's one thing that you can say about volatility. Is the data does suggest that volatility begets more volatility.
Oh, sure, yeah.
However, it does not say in which direction it does. This is why all of the studies that say, hey, if you're trying to time the market and you miss the 5 best trading days of the year, you're going to be, you'll be horrible, you'll have horrible performance. Well, the fact is the 5 best trading days of the year usually come in pretty close conjunction to the 5 worst. So it's unlikely that you would just miss the 5 best because they're typically stacked up pretty close to each other. It's just the volatility goes in either direction. So it's why I hate those studies where, if you miss the 5 best days, you'd have no performance. Well, how would you miss now we're saying that you're just going to miss the 5 best days
by the 5 worst.
But you'd also have to have the 5 best occur exactly when you're missing. Now you're saying you're just going to miss those and nothing else. And that's unlikely given how we know how volatility begets more volatility. Thus concludes introduction to statistics. Please hand in your final papers at the head of the class when you're leaving. We'll take a quick break here. When we come back, do you want to talk Fed or housing, Mark?
I always want to talk Fed.
Okay, we'll talk Fed when we return.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other's spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax-free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Piece in Bloomberg opinion, the Fed has to fix its communication problem. Mark, what is the Fed's communication problem?
I would characterize it as too much information. The columnist here specifically picks on the so-called dot plot, among other things, but it's that every 12-week projection we get for inflation, growth, unemployment, 1 year out, 2 years out, and then several years out. that projection represents the view of the median or the one in the middle member, not necessarily the view of the board. So it's inherently confusing as a result. And then, of course, the dot plot has been all over the place, or just plain wrong, to be unkind about it. Lately, it's not helping to inform inflation expectations or anybody's view, I don't think, of what the Fed is going to do, because it's so unreliable. So Crook, the columnist here, says, let's just get rid of it. I would agree with that and second him and say enough with the press conferences and everything else. Keep the statements short and sweet and informative and educational and end it at that. But this, of course, would be a move in the right direction.
If you're retired or nearing retirement and haven't done your planning yet, you could be missing out on opportunities that can save you thousands of dollars. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month. Month's winding down, by the way. It's called Balancing Asset Protection and Avoiding Estate Taxes. Early estate planning can have many benefits, especially if you want to protect the assets, but there's another big advantage. Doing your planning the right way might also help you eliminate your estate taxes. Learn how to keep your assets in your family and avoid probate. Get Cushing & Dolan's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes. And the month is winding down, so there's only a couple of days here to get the guide. Call 866-848-5699. That's 848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mark, just finishing up talking about the Fed here in terms of their communication. Beyond just the stuff that's mentioned in here, I have a problem with so many scheduled speeches from Fed officials. You know,
I agree.
You go through a normal week, and we've counted it. It's like you got like 12 to 15 of these things each week. And it does two things. First, it diminishes the value of each word spoken because they're just, getting lost out there. We all then try to parse each and every one, looking for that, one little glimmer of, I could get the edge based on what they're saying, and here's what they really mean by this. And it also, because they're talking so much, I think it makes them think they have to say something sometimes, when really, most of the time, the best thing to do with an economy is nothing. Like, you don't need to be constantly poking and prodding it, saying, is it dead yet, Jim?
You're right.
You can just leave it be sometimes.
Right. Bob Rubin, Clinton's Treasury Secretary, he was not making monetary policy. That's the Fed, not the Treasury, of course. But when asked about the dollar, he would famously, and it kind of became a running gag, say a strong dollar is in the United States' interest. Full stop. No more comments. Don't confuse people. It's when people get cutesy.
That's why I've said I would name, if I were president, legitimately, I would name Bill Belichick as my Fed chair.
Or make him at least watch Belichick press conferences.
We're on to the January meeting. That's all it is. You don't need to say so much. Quick break here. We got hour 2 coming up in just a little bit.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. Our guide this month is titled The Key Numbers to Know for 2025. Mike, one of the questions that we get asked quite often is, how much can I gift in any given year without having to file a tax return or pay any tax on it? What does that number look like for 2025?
Yeah, there's a tremendous amount of confusion about this, Chuck. I think there's a lot of folks who assume that when you give a gift or receive a gift, there's taxes due at the time. And that is almost never the case unless we are talking about tremendous dollar amounts.
Sure.
In 2025, the gift tax exclusion amount is going up to $19,000 from $18,000. That means that you can give up to $19,000 to any individual without having to file the special return of a gift.
What about if I am trying to make a gift in conjunction with a spouse? How does that work in terms of what we're able to do?
Yeah, I mean, you're able to double it immediately, right? So that $19,000 gets doubled. Keep in mind, too, that these are the gift tax limits per individual. And so you have seen people say, okay, I'm going to gift money to my son, my daughter-in-law, their 3 children. And in each of those cases, if you are married, that could be $38,000 per person without even have to file a tax return.
Our guide this month is titled The Key Numbers to Know in 2025, and it covers these numbers and a whole bunch more that can help you optimize your financial plan. We also have discussions about IRA contribution limits, tax brackets, a whole bunch of different things that are included in here. How do you request the guide? Call 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all 3 and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to 0. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to 0 due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you today, and as we get closer to wrapping up 2024, the stock market is saying, yo, I don't like what's going on somewhere. Well, we don't really know what it's saying, but Dow is off 557 points, the S&P's down 76, NASDAQ down 278, so about a 1.25% to 1.5% dip we're seeing across all major U.S. indices. It's being broadly felt. It's not just in any one particular area. As of this very moment in time, the S&P 500 now has about 15 securities that are up for the day, and the rest of them are, you guessed it, down. Actually, there are a handful that... There are 3 that have not moved today and don't appear to have any trading volume, so I don't know what to make of that, but it's neither here nor there. In any case, you've got markets selling off on the equity side today. Bonds on the other side are seeing some inflows, with the 10-year Treasury down 6.8 basis points to 4.551%. Again, there's no clear catalyst for any of this. It's a lightly traded week. You get all kinds of weird year-end rebalancing and this and that. I don't know if today means anything or doesn't. It just sometimes is. We've got oil today up 68 cents a barrel to 71.28. Big move happening in nat gas. I don't know if you've been watching the Natty anytime recently, Mark.
I didn't even know what that was, the Natty.
The Natty, it's nat gas.
That I get.
Yeah, the Natty. That's what it's called in the biz, you know. But nat gas prices up 18% today. This with a cold front coming for the southeastern part of the U.S. in about 2 weeks potentially. Again, the early warning forecasts are out there. And just as an example, they're showing New Orleans might get down into the 20s. So, that'd be a little bit chilly down in the Big Easy for good old Mardi Gras, right?
Oh, geez. When's Mardi Gras?
I thought that was March.
I don't know. I was just talking.
Yeah.
I'm pretty sure it's not March. It might be March.
March 4th.
There you go. It's March 4th. So a little early for that.
So
but
we're a
in
little
any
ahead
case,
of
they
ourselves.
still have stuff that happens in January, and they don't expect it to be, 18 to 20
They probably
degrees.
start preparing now, which is your point.
Yeah,
hanging.
You guys remember you guys know about the lizards in Florida, right?
The iguanas falling from the trees?
Yeah, they have the iguana warnings that they have to put out when it gets too cold there because the iguanas that live in the trees just start falling out and conking people on the heads.
Super Bowl is February 9th.
Where is the Super Bowl this year?
New Orleans.
Oh, it is?
Yeah.
Oh.
That's why I brought it up.
It's in a dome, though.
I know, but still.
But around the dome,
be cold.
It's outside.
Potentially.
And it could be cold there.
We'll see.
No lizards in New Orleans. Been there a few times. Not many trees downtown. It's good time, but not for trees and stuff. So you got oil prices down, nat gas prices. Oil prices up just a touch, nat gas up pretty significantly right now. We've got gold down $17.60 an ounce to $26.14 and 30 cents. Piece here from the Financial Times. U.S. credit card defaults jumped to highest level since 2010. So, a lot of times you get statistics like, hey, mortgage delinquencies double, and then you look at it and it's like, well, yeah, they doubled from the lowest reading they've ever been, and so they're still very low. Credit card delinquencies, on the other hand, are increasing meaningfully, both in terms of the dollar value and percentage of credit card debt outstanding. This is not entirely unexpected in a world in which you still have, prices, because, look, prices don't really come down generally. They move up either quickly, slowly, or they kind of hold steady. So prices have moved up. You have a whole bunch of people who, their income has moved up as well, but, maybe the stuff that they need to cover, like car insurance, has moved up more rapidly. And so people have been turning to credit cards to pay bills. And you've got a problem that has been building here. I'm still not convinced that this is a huge problem in and of itself right now, just because the amount of credit card debt that's outstanding is a fraction of the size of the mortgage market, as an example. So it's not going to cause a 2008 style meltdown. But you do wonder, hey, how much longer can households continue to go in this direction? And beyond that, how much longer are banks going to be willing to lend them the money to do so? And what does the economy look like if, something breaks there?
I think it is important to keep it in historical perspective, as you suggested. If you look at the dollar value of balances and you adjust it for inflation, which you always should, looking just at large bank consumer credit card balances, the level of balances, again, just the large banks, is lower than it was in 2019. The delinquency rate, which you alluded to, is quite high relative to the trough reached after COVID, is because you and Mike Armstrong talk a lot about this data series on the Financial Exchange. It looks elevated relative to the late 20-teens, but you have to remember that all the bad stuff was purged after the Great Recession, and there were reasonably creditworthy people who couldn't get credit for years.
Yeah,
relative to the 2000s. The delinquency rate is actually quite low, even at the most robust stage of the 2000s expansion before the crisis. Similarly, relative to the 1990s, the delinquency rate, again using just large commercial bank credit card balances, is also quite low. So it's hard to know, Chuck, is this a new troubling development, or is this a normalization that we're seeing?
Yeah, it's... Hey, monitor it, watch it, but
sure,
it's probably not causing a problem on its own. It's much more... Hey, if the economy slows and more people can't pay those larger balances,
That's a good way to look at it.
That's kind of the next. This isn't going to cause a financial crisis on its own.
It's sad though, because between social media and 24-hour finance news, even respected commentators, Mohammed El-Arian today on Blue Sky, which is the alternative to Twitter or X, whatever it's called now, tweeted. I don't know what verb to use for when people send something on social media other than tweeted, so I just mean put out there.
Posted.
Social posted. Thank you, posted. Posted this headline and suggested that it boded, ominous things for the economy. Maybe it does, maybe it doesn't, but I would appreciate a bit more level-headed analysis. Let's not run for the hills every time a headline suggests that something might be a little bit amiss.
No, I still remember the headlines. I think it was either late 2020 or maybe late 2021. It was one of those years. It was whenever you remember during the pandemic, they put in the mortgage forbearance program so that you couldn't be foreclosed on and things like that.
Yeah.
And as those were rolling off, you had, mortgage, foreclosures, pre-foreclosure properties have jumped like 170%. And then you look at the data and it's like, well, yeah, we had no foreclosures, so of course they're going to jump from there because you had like 3 of them last month across the entire country. So what are we really doing here?
Yeah, and I know some of you listening are thinking, you guys always say things are great, and I know they're not great. And that's not true. We acknowledge the flaws in the aggregate statistics. They're just broad averages, but they're the best we've got. That's why, as you always say, Chuck, don't look at one data point, look at a wide variety. Don't take opinions from one person or even news channel. Try to take a broad sample.
And the other thing, quite honestly, most of the times once you realize there is a problem, you say, okay, no, I was going to say, most of the time when you realize there's a problem, okay, what are we going to do to fix it? And then you solve it before it becomes too late. The ones where it does, become too late, like 2008, those are the ones where people are screaming hey, there's a problem, and for 3 years people are ignoring them, and then it became too late.
It's just hard to think of examples where we did act in time to prevent
Y2K.
Broader contagion. Because we can't do the so-called counterfactual and ask, would the world have really stopped if that bug hadn't been fixed? We'll never know, but I think it's safe to assume that we did the prudent thing. Economically, harder to come up with examples of us acting resolutely and swiftly. Maybe the savings and loan resolution of the early 1990s when we stepped in and did the law required it, but bigger hemorrhaging was avoided probably.
Sure.
Otherwise, sometimes things are on our doorstep and it's too late.
Quick break here. When we return, we've got trivia right after this.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all 3 and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So, yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that. But we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And as we all know now, yesterday Jimmy Carter passed away at the age of 100. Carter is the longest-lived U.S. president in history. And in case you missed it, announced around 10 a.m. this morning, equity markets will be closed on Thursday, January 9th. Just a note there. Trivia question today: who is Jimmy Carter's vice president? Once again, who is Jimmy Carter's vice president? Be the seventh person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, be the seventh correct response to text us at 617-362-1385 to get that Financial Exchange Show t-shirt. See complete contest rules at financialexchangeshow.com.
I was talking to Mark about this during one of the breaks, but it's what do you got?
Sorry, I was reacting to something different. I apologize.
It sounded like you really didn't want to talk about this.
That was an audible gasp.
It was like, oh. Sorry. No, it's fine.
Very audible.
I'm not going to make charts when you're talking going forward. Sorry.
It's wild how basically until World War II, presidents didn't live past 70 years. You go and you look at it, and granted, like I'll start with FDR. Just he had kind of a bad run with polio, obviously. So his life expectancy was skewed. Like he probably outlived his life expectancy by 50 years, but he was 63 when he passed. Hoover, kind of the exception to the rule. He was 90. Okay, but other than that, then you got Coolidge, who was 61, Harding, who was 58, Wilson, who was 68, Taft was 63. Teddy Roosevelt was 61. McKinley was 58. Cleveland was 61. Cleveland was 71. He was one of the ones that did make it past 70. Harrison was 68. Chester Alan Arthur was 67. Garfield was 70. Hayes was 71. Grant was 63. I mean, like, it was just, like, constant. I mean, Abraham Lincoln had one of the longest life expectancies. He was assassinated 56. And other than that, it's like, it's basically all, like, 60 to 70 until World War II. And then, it's all the presidents live, not forever now, but long lives. Like Nixon, 81. Ford, 93. Carter, 100. Reagan, 83. George H.W. Bush, 94. We might have passed, however, the thing I was finding interesting this morning, until Carter passed, we had 5 living ex-presidents. There's a realistic world in which, like, 5 or 6 years from now, we might have 1 that's left. Because Clinton right now is 78. George W. Bush, 78. Obama is 63, so he's probably still kicking around for a while. Trump is 78. Biden's 82. If you just look at life expectancies, there's a reasonable case that in the next 5 to 6 years, all of them but Obama might not be here. Like, that could be, you could go from 5 to 1 in like a 5-year period.
What are all those Secret Service guys going to do? They've all got big details.
They do. I mean, they'll get deployed somewhere.
I know that wasn't your point.
No.
But I'm just thinking.
No,
that is a very unique skill set.
Well, especially because the Secret Service, remember, it has 2 missions. One is protect, like, the president and dignitaries and, other high-end, high-value people in the U.S. government. The other is, the other job of the Secret Service?
Counterfeiting.
Anti-counterfeiting.
Yes.
So I don't know that you can't just get reassigned from, I was on the president's detail.
Yeah, that's got to stink.
Okay, look at these $100 bills and tell me if something's wrong. You want me to do what?
Yeah, one day you're a stud, you carry a gun, the next day you're working with people
Do I need to wear a vest?
Look like me.
You don't need to wear your bulletproof vest. Here's a Patagonia one that you can put on instead. I mean, how is that? How are those the 2 jobs of the Secret Service?
Yeah, getting reassigned, that's got to be a tough conversation.
Right? It's not like you're working at the IRS and you go from, like, processing returns to looking for fraud.
Yeah, reasonably
they're
proximate.
like, okay, like, fine. Like, I'm still looking at 1040s. It's fine. It's just I'm looking at them in a different way. This, hey, you're out there, looking for threats to the president, to, Jimmy, does this look fake? Hold it up to the light for a little bit.
Yeah. Andrew Jackson didn't have a mustache, did he? No, I think that's a counterfeit, Bill.
Have we always had orange bills? No. Looks a little bit small. I don't think that's a real 500. That looks like it's a Monopoly one, Jim.
Yeah. Who put Little Richard on the 50,000? No, I think that's a counterfeit, schmucky. It's just got to be a real career downer. I mean, at that point, you got to start to look for other work when your manager reassigns you to inspecting quarters. I would think.
Are counterfeit quarters a problem? Are there lots of those?
I'm just assuming that.
I'd imagine it's the
I can't think of
hundreds.
anything more menial, is why I mentioned that.
Secret Service has 8,300 employees.
Oh, God, don't tell Musk.
Interesting. So until 2003, it was actually still part of DOT, the Department of Treasury. I didn't realize that it was under there until interesting. It got moved to Department of Homeland Security after the Patriot Act passed. So there you go.
And nobody knew or cares. I don't mean we shouldn't be talking about it. I just mean the government is so vast that probably never would have known that.
But man, like it's just wild that like those are the 2. That's like having. That's like
weird. It's weird.
It is. It's like having someone who specializes in, someone who works in your office. They're like, I do accounting and I write the marketing pieces. You do what? No, you're probably not. Okay, fine. Like that's fine. But
it's like saying you co-host a radio show once in a while and you're an analyst. What are you, nuts?
Well played, Mark. Well played.
No, you have to have a bit of a split personality, I think. I'm not saying I do either well, by the way.
No, I mean, listen, it's what is it? The phrase like you can be the one that ends in master of none.
Oh, a jack of all trades.
That's the one. Jack of all trades, master of none.
That's not a compliment.
No, I never said it was. I'm in the boat with you, Mark.
Well, my live year-end review on air.
I'm in the boat
Mark,
with you.
we think of you as a jack of all trades, master of very, very few.
Taking a look at markets as we head towards the bottom of the hour. The Dow is off 468 points. The S&P is down 69. NASDAQ off 263. So markets, paring their losses somewhat, but still comfortably in negative territory, or I guess uncomfortably in negative territory. 10-year U.S. Treasury also continuing to see lower yields today, down 6.6 basis points to 4.553%. I didn't check on gas prices this morning, actually. AAA national average at 302 6/10, so we still just can't get through that $3 mark nationally. It's just we're just bumping up against it at this point and can't seem to get all the way through. Oil prices continuing to rise today. West Texas Intermediate up 78 cents a barrel to 71.38 at the moment. What was that about?
Sorry, I can't say.
You're still looking at whatever it was.
The gas.
I'm sorry. My inner monologue is entertaining me today, and I'm half listening to everybody else. I apologize. I know it's rude.
That's fine.
Just burst out.
Listen, that's a quarter more than Tucker normally listens to us. He's normally prefer not to, you know? Let's take a quick break. When we come back, we get the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Early estate planning is crucial if you want to protect your assets and avoid massive tax consequences. Cushing & Dolan are experts in elder law and taxation, and their new free guide can help give you just that. It's called Balancing Asset Protection and Avoiding Estate Taxes. In it, you'll learn how to keep your assets away from the nursing home while reducing and potentially eliminating your estate taxes. If you have an existing estate plan but aren't sure about your potential liability, or you need a new plan, call Cushing & Dolan today at 866-848-5699 and get this free guide called Balancing Asset Protection and Avoiding Estate Taxes. Don't leave your assets to chance. Call 866-848-5699. That's 866-848-5699. Or you can request your guide online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Key Numbers to Know for 2025. Mike, when it comes to 401ks and their contribution limits, 2025 is a little bit unique in that it is the first year of the super catch-up limit.
It is, yeah. So there's a brand new contribution excess amount that you can put into your retirement plan, but only for a very specific window. You must be between the ages of 60 and 63 to participate in this special super catch-up contribution, according to the Secure Act 2.0. And so there's a little bit extra that you might be able to put in if you fall into that age demographic.
So how much is the normal 401k max? How much is the regular catch-up? And then how much is the super catch-up?
Yeah, so for the normal 401k contribution limits, the most that you can put in 2025 is going to be $23,500. If you are over the age of 50, you can do an extra $7,500 into that 401k. And then finally, if you just happen to be in that narrow band, you can do an additional $3,750 catch-up contribution on top of everything else that we already went through.
Folks, our guide this month is titled Key Numbers to Know for 2025, and this is just one of the numbers that's included in it. We also have discussions about IRA contribution limits, tax brackets, a whole bunch of different things that are included in here. How do you request the guide? Call 800-393-4001. That number again to request the guide is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
Trivia question today was, who was Jimmy Carter's vice president? That'll be Walter Mondale. Winner today of the Financial Exchange Show t-shirt was Jay from Centerville, Mass. Congrats to Jay. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mark, do you want to talk about managers or artificial intelligence? Or managing
isn't there
artificial
a thread?
intelligence?
Yeah, isn't there a thread between the two? We could quickly hit one and then... I don't know, Chuck.
Let's talk a little bit about AI. Did you guys cover... I was out the last couple days of last week. Did you guys cover this stuff from Sam Altman?
Literally no one in this room was here on Thursday, Friday.
Okay, so that's good.
Tell you.
So I don't know what we talked about last week.
No, wait, I was here. I had to think about that for
Were you?
3 minutes.
Did you do the show?
I believe I did.
Oh, I don't know.
Yeah.
Did you talk about
Mike
AI?
Armstrong and me, right?
Did you talk about AI?
Yeah,
I believe we did.
Allen Iverson.
Yeah, always.
So Sam Altman,
we
who
did,
runs
we did.
OpenAI, had put out like a letter or something late last week, and it was like, hey, we're going to need to raise way more capital than we ever thought in order to do what we want to do. This coming on the back of, they had like $3 billion in revenue this year. I think it was 3.7, and they're losing $5 billion or something like that.
Yeah.
It's starting to feel like the whole, generative AI thing is really giving me self-driving cars in like 2016 vibes, in that in 2016, 2017, all we heard was, hey, like, look at all these self-driving car startups. We're right around the corner. We're going to have this figured out in the next few years. And here we are today, and there's one company that kind of does it, Waymo, but in like limited locations and yada yada. And no one else does, like, true driverless, like, hey, you don't have a driver in this vehicle ever.
Yeah.
Generative AI is starting to give me that kind of vibe, and it's not good, is kind of where I am. And one of the things that I saw on this, just as an example, is... I've ripped on Google about this for a while. So Google gives an AI overview for anything that you search now. And it's just like, it's generally horrible. So someone decided to put in, either of you familiar with the movie Encanto?
Yes.
Disney movie from a few years back?
Sure, yeah.
Someone Googled Encanto 2. And here's Google's AI overview. Encanto 2, A New Generation is an animated music fantasy comedy film that's a sequel to the 2021 Disney movie Encanto. It's scheduled for release on August 25th, 2024, which was 4 months ago. There was no Encanto 2 4 months ago.
Yeah.
And so, like, it's just making crap up. Like,
Well,
that's not all it is, but I'm more and more convinced that, yes, we've made something that makes organization and getting started with ideas easier, but it absolutely is nowhere near being able to just do all the work for us the way that people were talking about. And maybe it gets there, maybe it doesn't. Maybe the next generation of stuff with these AI agents can actually get there. But, man, I got to tell you, I am not trusting anything to an AI agent based on what I have seen AI actually do to this point. It's not that it's awful. It's just, hey, it might give you like 90% accuracy, and then it just makes some crap up along the way, and you're like, nope, can't use that. Got to get rid of it.
There are certain tasks that it might do well. A study that was done by a group led by a graduate PhD candidate in econ at MIT recently concluded that using AI, and I'll just be very generic here because I don't understand exactly what form of the application he used, but it allowed the researchers in certain fields to quickly home in on successful combinations of chemicals that yield the desired compounds. It experiments a lot faster than humans could, and it experimented in logical directions. But to think that it's going to permanently boost economic growth, which is what some of the more optimistic proponents seem to be promising or at least suggesting, is at odds with the historical record. If you look at the boost in productivity and thus growth that the internet provided, it only lasted several years. It petered out. We went back to trend. Ditto with things like electricity and other really more life-changing innovations, frankly, than the internet.
The airplane.
For example, or I was thinking the indoor toilet. Or, I mean, really, we're talking simple stuff. Central heating, air conditioning in Florida.
Antibiotics.
There you go. There are lots of examples.
Like
it was a miracle century.
You won't die from a basic wound anymore.
Yeah.
You know?
The effect of these things on the trend in growth is really imperceptible. It's just a nice, constant, upward sloping series. So I think you have to take these pronouncements with a huge grain of salt. My only question is, are these guys deliberately misleading us, or do they believe their own BS?
Probably a little bit of both.
A little bit of both.
Probably a little bit of both.
I think to be a great entrepreneur, Edison...
You kind of have to delude yourself.
Edison's electrocuting elephants and...
he did that?
Right. To prove... He was trying to prove that DC was... Or that AC was more... Was he DC or AC? I always forget. Was he a proponent of DC and Westinghouse was AC?
I don't know if AC/DC was around then.
He did like the band, too.
Yeah.
You know what I mean? They're all promoters. They're all carnival barkers to a degree, and at some point they don't know when to stop believing their own hype.
Sure.
So it's not... Altman is not conning us. He's just too optimistic. Or was too optimistic. So the future is always 5 years away. Like proponents of nuclear fission.
Fusion.
Are we combining or splitting?
Fusion's the together. Fission's the splitting.
What did I say? Oh,
fission.
Okay, sorry. Thank you.
Fission we've done.
As you could
a number of
take
times.
My advice on anything related to physics, as this show proves. But, you know, these guys are all part con man, part visionary. Musk is the same way with robocars,
again,
with robotaxis.
You kind of have to delude yourself.
It's definitely.
Can you back it up with the deliveries of the product as well? And when you can't, then, like, it becomes apparent, okay, like, yeah, there's an issue here. Folks, we are just 2 days away from 2025, and the Armstrong Advisory Group has a guide that has been available this month, but we're getting pretty down near the end of it. So if you want the guide titled The Key Numbers for 2025, last chance. This is it. This is how you get it. Call 800-393-4001. You can also go to armstrongadvisory.com and request the guide there. What does it talk about? Hey, how are tax brackets being updated? What's your Social Security cost of living adjustment? Medicare premiums, what's happening to them? Retirement account contribution limits. All these numbers and more included in the Key Numbers for 2025 guide. Remember, once we hit January 1, can't get it anymore. So, how do you request it? 800-393-4001. That is the number to call. You can also go to armstrongadvisory.com and request it there. Again, it's the key numbers for 2025, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Can we talk a little bit about Netflix and the Christmas Day NFL games?
Sure.
I got a bone to pick with them. Tuck, did you watch these games?
So the first one I had on in the background, I'm talking about the Chiefs and Steelers game, had it on the background. The night game, I literally did not watch a single second of it.
From your background watching, problems, good things?
So I didn't have any issues whatsoever. I know that my dad had some issues trying to pull it up, and I went on Twitter to see if there were any issues. And you saw stuff here and there, but it was nothing to the effect that we saw when Amazon debuted on Thursday Night Football a couple of years ago. But overall, it seemed like it was a success. No?
Seems like it. So Netflix, they put out a statement like late on Christmas. I think it was at 4 p.m. or something. They said that over 200 countries tuned in at some point during Chiefs Steelers, which sounds, impressive. Impressive.
Is that a word?
It should be. Wow, that's a good one. Impressive.
It was impressive. You're right, Chuck.
It was very impressive. So they put out, okay, like, yeah, we've got 200 countries that, watch this.
Yeah.
There are 193 countries in the world and a couple others that are like city-states kind of. So what are we really talking about in terms of, hey, there are 195 recognized countries and Netflix is saying that 200 countries stream this? Are you just making crap up?
Probably.
Because that's what it seems like. Now,
I mean, that night game, by the way, was awful. It was 31-2.
To be fair, in the International Olympic Committee does say that there are more, but it's, again, you're getting like micro countries. And by the way, Netflix doesn't actually stream into every country right now. They don't have contracts for distribution in all of them. So I'm kind of feeling a little bit, I'm wondering how much I'm being hoodwinked by Netflix in terms of how popular things are that they're disclosing. I don't know that I trust their data that they're telling us, because they told us that more countries watched Netflix than have Netflix contracts, and that there aren't that many countries. There aren't that many.
Some of them adding up.
So that left a bad taste in my mouth. The game, I watched the first one a little bit kind of in the background. Presentation seemed fine and everything.
Yeah. Streaming quality is, as I hear, better than, say,
seemed fine.
Amazon's.
Yeah, seemed absolutely
NFL
fine.
Quality.
But I'm just trying to figure out what exactly is going on here in terms of, what are these 200 countries that it was streamed in? Because that seems kind of like, a lot of countries. And, man, I'd like the full list of them from Netflix at least, with some of the data to back it up now. Because you make a claim like that, you kind of got to back it up.
New Canada? Is that
is that officially recognized?
I don't know.
I don't either. I don't know that the
Canada
UN
is going. Trump wants to buy Canada and Newfoundland and Greenland. Excuse me.
I mean, look, if the Canadians actually say like, but that would be a contraction. That would be a merger.
I know. Chuck. I don't have the answers.
Who gets added to the S&P 500 if the U.S. buys Canada? Actually, really interesting question there. What do you do with market indices if a country buys another one? Actually, not a really interesting question, because it's not going to happen.
I think they just get absorbed. Yeah. The Canadian, I don't think we'd even notice it. I don't know what the total market cap of Canadian domiciled companies is. If ours is about 60 or so trillion, maybe it's 5, maybe it's 3 trillion.
A lot of banks, a lot of energy companies.
It's like one day's good performance for our market. Just in terms of market cap.
It's one NVIDIA.
Right? It's like a half an NVIDIA.
I gotta look at this. I gotta see what it is. So
Canadian
Canada's market cap.
I'm gonna say 5 trillion, 4 trillion.
It's 3.5. Canada's market cap is basically one NVIDIA.
Yeah, right. A drop in the bucket. We wouldn't even notice it if we absorbed it.
It's wild.
Maybe Trump's got a point.
We'd notice it.
We would, you think?
3 trillion still a lot.
The composition of the index. I wonder if they have how many companies they have that would even make it into the S&P 500. I know it's.
I bet a couple dozen.
Yeah,
I bet 25 to 30.
Okay.
Something like that. I don't want to poo-poo on. Like I don't find it.
I'm not. I have nothing to do with our prowess. I'm just making an observation that we could easily absorb them if that's what the president-elect decides to do. I'm trying to be constructive, Chuck. You got to play ball with this regime, would you?
Okay.
You want to be on the outs? I don't want to be on the outs.
I don't even know.
He's suing everybody.
I don't even know if I am on the outs.
Mr. President, we're playing ball.
How do I know if I'm on the outs?
Oh, I think you
would know?
You'll know.
Okay.
You're going to get served with papers.
Let's take a quick break here. When we come back, let's do a little bit of stack roulette.
Oh, keep talking. Something's happening there. Hold on. Stand by.
We're not doing stack roulette yet?
Stand by.
Okay.
The heck with it.
We're going to keep talking. Mark, have you ever done any noctourism?
I beg your pardon.
Noctourism.
No.
It doesn't sound good.
It sounds cheaper. It sounds like it should be cheaper.
All right, I'm ready
Like
now.
no days, just 6 nights in Puerto Rico, that old Rodney Dangerfield line.
Let's take a quick break. When we come back, we're talking noctourism after this, because it'll be later.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your lifelong financial plan should always be top of mind, and as another new year approaches, now is the time to review some key numbers that may affect your strategy going forward. Our guide walks you through several important numbers that you'll need to be familiar with for 2025, especially from a tax standpoint. It's called Key Numbers for 2025, and in it, we'll explain marginal tax brackets for both married couples and single filers, as well as information about the standard deduction that'll be pivotal for your financial planning strategy. We'll also explore other areas like the federal estate tax and gifting limits. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. With winter here, now's the time to start looking at a fabulous holiday vacation, and there's no better place than the U.S. Virgin Islands. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. No passport is needed, and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visit usvi.com to book your trip. That's visit usvi.com.
Mark, let's talk a little bit about noctourism since we teased it. So noctourism is the idea that people next year, apparently the hot thing, is to be traveling to do stuff at night where you're going. So stargazing and looking at the northern lights and stuff like that. Your thoughts?
Well, I like...
Not much of an astronomer, I guess.
No, I own, astronomy binoculars. I find it interesting from time to time to look at celestial objects or whatever gets my attention. But, the universe hasn't changed much in my lifetime, so after a while it gets old. I guess to experience the northern lights continuously at a very high quality, not the little fleeting experience we had here about a month and a half ago, would be cool.
Yeah.
Look, I mean, if somebody likes it, Chuck, it can be a
Totally.
niche. Sure.
I do wonder how much of this stuff is because of social media and being able to post the cool pictures and stuff.
Yeah, you're right.
Yeah. I look no further than what's the place in New Hampshire with the really scenic lake that now has a line 3 hours long every fall day in order to come up to it and take the picture of the lake.
I don't know.
Because everyone wants it on Instagram.
I have no
And
idea.
it kind of ends up ruining the whole vibe and everything. And so that's the stuff that kind of bothers me is when it gets overrun by people who don't even really want to experience
Echo Lake?
Yes, that's the one. People don't even want to experience the culture of the area. They're just I just want the picture for Instagram. It's well,
yeah, there's a line of people there. It's just
okay,
oh God,
yeah,
what are you doing?
When you die, you're gonna get to the pearly gates, and they're gonna be well, your Instagram was great, so you qualify. But you left a little bit on the table with your MySpace, and your TikTok was awful, so sorry, you're going to the bad place. What?
Yeah,
I mean, that's not actually what they say there, but in any case, I guess I just wonder how much of this is out of actual curiosity to see these things, and how much of it is because you want the cool picture.
That's actually kind of pathetic.
It's
kind of sad. Not that I have anything better to do, but that's especially sad.
I don't have anything better to do.
I think it's sad.
I'm not I'm the least cool, hip person out there. But I don't know. I have my interests, but they're I don't try to broadcast
You're not trying
them
to
to
please
people.
somebody else. You're doing it for you. The whole...
Well, listen, Mark. As I heard one day, back in the day, we all got to serve somebody. All right? We all got to serve somebody. We're done for the day. We will catch you tomorrow on the Financial Exchange.